My name is Mohammed Masood Farid, and I am Assistant Manager Sukuk and Islamic Capital Market at AlHuda Center of Islamic Banking and Economics. Welcome to the webinar session on digital infrastructure for Islamic investment platforms. Mr. Konstantin is a fintech entrepreneur and thought leader with over 15 years of experience in technology and alternative finance. As CEO and co-founder of LenderKit, he drives the development of white label crowdfunding software that powers compliant debt equity donation platforms for clients across Europe, North America, and the MENA region. He also co-founded Crowdspace, an industry hub and educational directory that connect investors, platforms, and fundraisers worldwide.
Thank you, Mohammed. Thank you for introduction. Hello, everyone. Today I'm going to share some insights for digital infrastructure for different investment platforms. First, we start with a little bit of market overview with focus on Islamic fintech and global fintech as well. And then we'll touch why now, so why it is time to go digital and to look into this direction. Of course, we'll look into certain roadblocks and obstacles for digitalization, what might help and what's not helping so much. We'll look at regulations in different regions, and that's why it's important to know which regions you are from, so we can talk a little bit more about this. Of course, we will touch technology because I'm a technical guy and software developer by background and mathematicians as well. We'll look at some case studies very briefly and summarize it in some lessons and also potential opportunities, because I think there are some, and it's important to look at them. So, as I said, first market overview. We'll try to compare and look at different statistics on globally first, and then with focus on Islamic market. Forgive me because I'm a crowdfunding expert, so I'm going to, in some of my examples and statistics, I will have to refer to crowdfunding and sometimes to a wider segment. So some of the knowledge will be tied directly to crowdfunding, but it's actually applicable to other sectors and other types of fintech platforms as well. So if we look at crowdfunding, global market and global volume of crowdfunding and digital investment, then there is a projection to reach it about 24 or 30 billion by 2030, which is actually a huge number. And to be honest, from my perspective, in order to reach that level, it is nowhere near that level right now. The crowdfunding really needs to become cross-border and global. And right now, and I will talk about it a bit more later, it is still more regional or local. So it happens within certain countries, but not so much on global or cross-border level. So there are some drivers, of course, for this growth in general, not just crowdfunding, but for fintech. And that includes tokenization, embedded finance, and also direct participation of investors, like it is happening in crowdfunding and investment platforms. And regulators sometimes are on board with this type of growth, and they support it with harmonized frameworks. And there is a good example of harmonized framework in Europe. I can see that not many of you, or if anyone is joining in from Europe, so I will talk a little bit more about it later, so you know what's happening in Europe. But then there are also quite robust frameworks in the UK. FCA is the authority which oversees financial sector and crowdfunding in particular in the UK. And SEC, Security and Exchange Commission in the US, is also helping. And there are exemptions from certain laws and simplifications on how to raise money through so-called regulation crowdfunding, Reg A, Regulation A, and other exemptions. But if we look at Islamic markets, then on one hand, there is a big volume of finance assets, and there is an expectation that actually the volume might surpass even 4 trillion by 2030. and the market is projected to grow very significantly. There are certain players in the market already, and from geography you can see that they're based in different regions and Southeast Eastern Asia, like ETIS, and there is a platform focused on Islamic finance in the UK called Cardus. Then there is Forus enabling SME finance in the Kingdom of Saudi Arabia. There is a capital boost in Singapore. There is Stake or Get Stake, you might know it, in the UAE, which allows to invest in real estate through crowdfunding platform. But you can see that there are nobody is mentioned here from Europe or US, and those regions are not so much developed for Islamic finance, even though there is huge population, huge diaspora as well in those countries and regions. So basically, there is still less than 2% of global fintech activity when we look at Islamic finance. So why now? Why is it the right time, and why there is no choice except going digital in finance? Well, there are a number of factors, of course, and first of all, investors and potential users of the platforms in general, they are used to using fintech applications, digital banks and digital applications and so forth. So they sort of expect the same level of digitization when it comes to investments. Regulators in different countries and different regions, they had different stages. So somewhere it's very advanced, somewhere it's only sandbox modes for certain countries, somewhere still to be decided in the future. But regulators slowly, step by step, basically become on board with this digital transformation, and they support the growth and also try to make sure that everyone is playing with the same rules and there are certain transparency, and there is a way to grow and advance in this market. And of course, if digital platform is done in the right way and there is right infrastructure, going back to the topic of this webinar, then there is also transparency, and there is it's easier to make sure that everything is following the same rules, and there is everything is auditable and so forth. Okay, so let's look at challenges. What's stopping everything from becoming digital, and what's not stopping basically, but if you go this way, so what kind of challenges you need to keep in mind? First of all, and foremost, it's compliance, and this applies both to Islamic finance and in general to fintech. I guess if you ask any fintech founder what would be their main challenge, they will start with compliance. So because many of those business models are regulated and they need to follow certain rules, it also creates operational challenges, technical challenges, and other challenges which need to be addressed. But if we look at Islamic context, then there are also additional rules which need to be followed, and they're also not so much unified. From jurisdiction to jurisdiction, they differ, even though the overall principles are the same. Still, they are implemented differently. Scalability is also a concern because it's one thing to build something, and right now there is also even AI which can help you build some sort of MVP and I don't know, even launch a platform quite quickly or go to markets with it. But all those quick solutions are not ready for real growth, and also regulation, because regulation includes certain measures starting with even security and scalability. And for all those quick ways to go to market, this is usually not the case. So it's okay, you can go to market with your MVP, but then when you reach certain scale and you want to grow further, you hit huge technical challenges. Next, integration, because and this goes back to compliance, you need to handle and automate certain things, including KYC, know your customer, also payment gateways, analytics, and so forth. And at the first glance, it kind of seems easy. Well, every service, every third party usually has APIs, and what can be difficult in implementing APIs. In reality, it is not so easy. There are so many challenges, both technical, because APIs not always work as intended, but also the biggest challenge sometimes lies in choosing the right integration partners, integration or providers. And those are also very fragmented depending on where you are, in which area you operate. And one solution which might work for Middle East, for example, or even for a particular country in the Middle East will not work in Africa, will not work in Asia, will not work in Europe or US. And in every region, there is a certain set of different providers. A bit further, you will see some examples. So you'll see how diversified it is. Well, investor trust is also very important because if for people to use those platforms and without users, they're worth nothing. You need to gain this trust. You can do it with user experience, user interface, so it looks reliable. And of course, there should be transparency, there should be security, there should be no known issues, which usually kind of creates certain element against trust. So, of course, this is also a complexity and challenge. And time to market, this is a very important thing, and everyone wants to go to market fast. But at the same time, as we looked before, speed might compromise the quality, so it's not scalable, and you're not ready for your growth, and you want to grow because this is why you go to market. And on the other hand, this also you can't go to market without compliance and without license if it's a regulated activity. And from our experience, and we work with platforms who launch, and sometimes it takes them years to obtain a full license and go to market. So for a startup, for example, it's not really viable to wait a couple of years until you can launch your platform. For financial institution, well, that might be more reasonable. So they have time, they have other business, they have other things to do until they wait for the license. But if it's a startup, fintech startup, it's well, what would you do for 2 years? You need to still have a team, you need to build your product, and you can't go to market. So this is quite challenging. Now let's look at different global regulations, and again, many of those regions seem to be not very applicable to you, but I think it's important to understand what's happening in the world in different regions. So I'll start with European Union, and European Union might serve as an example when it comes to crowdfunding, as an example of real cross-border and unified framework. So basically what's happening in European Union is there is so-called European-wide crowdfunding regulation, which is abbreviated as ECSPR. And the idea is that you can get license in one of the countries, one of the 27 member states, and it is automatically passported in all other states or other countries of European Union. So basically what it means is you can get a license in Germany, for example, and then you can operate in Italy, Spain, or Ireland, any of European Union's members. And it's quite handy. Otherwise, it would mean that if you want to work in Germany, Austria, Switzerland, and all of those countries are German-speaking, for example, you need a license from all of those countries. And of course, it takes time, legal costs, and other hurdles. UK, which is no longer part of European Union, has their own regulatory environment, and it is quite mature in the sense that they have it for about 10 years already. So they changed it multiple times based on real cases, real feedback from the market. Well, right now, some people think it's over-regulated, so it kind of stops further growth, but I think it goes from less regulated to more regulated depending on how the market behaves and how much what is happening there, what cases are. In the US, since 2012, there is so-called Jobs Act, which allowed to raise money directly through regulation crowdfunding, and that simplified equity raise for many of the companies, startups, small businesses. Unfortunately, this type of regulation is still not so much popular in the US, and not so much money is raised through regulation crowdfunding as the expectations were. But there is still growth, and there is expectation that they will get there. There is also Reg A plus, Regulation A plus, which allows to raise a larger sum. So Regulation CF is limited by 5 million US dollars, and Reg A plus is used for larger raises. And Middle East is very active. In MENA region, there are a lot of platforms raising in Saudi Arabia under CMA authority regulation. There is DFSA in Dubai. There is CBB in Bahrain, SAMA, which is a central bank of Saudi Arabia, and Qatar central bank. They have their sandboxes, and this is just small list of examples of what is happening. So basically, I would describe it as there is a combination of sandboxes where the idea is to test innovative business models, and full-scale regulation where it's allowed to operate normally in the market. So there are different stages of this progress, but this region is definitely booming in this sense. Now let's look at tech solutions. So basically, what somebody who would want to launch and go digital with an investment platform, what kind of technology is needed there. So you can see on the slide many different building blocks, and not all of them are required in every specific case, but I think it gives you an sort of overview of that it's not just one piece of software, it's actually a very connected system between different services, vendors, providers, and in the core there is software for actual investment platform. So if we try to look at the layers, first layer is the actual core software, and this is what we built at LenderKit, the software for the platform operation, which includes back office API, different backend processing, and so forth. And what helps here is to have modular architecture, because in different jurisdictions, different countries, different business models, there are different needs for functionality. So when there are modules which can be turned on and off, it's very helpful. Then the next layer is integration of third parties, and that includes KYC, AML, anti-money laundering providers in order to onboard investors and sometimes fundraisers safely on the platform, make sure that everything is compliant with regulations and other requirements. And the other very important thing is payment provider. And payment provider is, of course, in theory, you can do direct integration with a bank, or you can do some things manually, but if you want to scale the platform, then you need to automate your payment flows, and for that you need sometimes very specialized payment providers. unless you want to be licensed as a full service payment provider yourself, but this comes also with huge costs and also takes a lot of money. Custody and escrow, this really depends on the region and how the regulations are implemented there, but sometimes you're obliged to keep the funds in escrow until certain moment in the platform money cycle happens. And for that, you also need an authorized third party or provider who you need to integrate. And there is a layer, of course, of infrastructure. So you need to find the right clouds. You need to build all those automation and other technical things, which I don't want really to go into here. Now, if you look at this slide, this is just a set of different providers which we, for example, had experience with, and in reality, it is much more wider. So in every what I said before, in every particular region, in every particular business case, there is a need to find the right providers, the right payment gateway, which will work in your country, which will work with the type of businesses or projects you're going to raise money for or provide investment opportunities for. And that's not so easy as it seems, unfortunately. In Europe, there are certain standard solutions which can be used there, like Lemonway and MangoPay. In the Middle East, it really depends on the country. We sometimes work with local banks, integrate local banks, but also payment providers like Hyperpay, for example. And then for KYC, AML, there is also plenty of solutions all over the globe. And it's a matter of finding the right one. Now let's look a little bit more about examples of platforms and use cases, what kind of markets they operate in and what kind of business models they have. Very briefly, we'll start with Foros, who was actually our first customer in Saudi Arabia back in 2018. And they launched a first SME financing platform in Saudi Arabia. And since then, they've grown into quite large business, to be honest. So this is a case of SME financing. Another example is in the United Kingdom, the platform called Cardus. They are regulated, of course, by FCA, Financial Conduct Authority. They offer ethical SME financing and investment options in various projects. And they do it in the UK. So but they only do it in the UK. So talking about being local or regional, this is one of the cases where they can't properly expand in other areas. Even though I know that they want to, it's not that easy as it seems. They are based actually and licensed in a few countries across Asia. They serve as one of few examples where crowdfunding and investment platforms are actually cross-border and they operate in multiple jurisdictions. I think they are quite well established and they might serve an example. So they have a variety of countries, including Malaysia, Indonesia, Oman, where they have licenses and where they operate. But still, those are separate licenses in separate countries, and I'm sure that the overall legal structure is also not very easy. So, yeah, talking about hurdles and obstacles, this is one of them. Capital Boost represents a Singapore-based company. I guess it's also SME financing like Foros, for example. But yeah, I guess the reason I included them, I wanted to show geography a little bit and to show in which regions there are established cases. And last but not least, actually, I'm sure that I was hoping there would be people from UAE. I didn't see any, but you would know Stake, as it's quite famous real estate investment platform, which initially was launched in the UAE in Dubai, but later they also launched in Saudi Arabia. And I also know it wasn't easy, and they had to basically it's two different companies, one UAE based, one is Saudi Arabia based. They just operate under the same brand and try to um, make impression of one platform, but in reality those are two different business models. So it's not very seamless expansion. It's more like well, case by case, country by country, you adjust to regulations. Now, we saw that there are successful cases. They happen in certain countries, certain regions, but there are also regions where there is large population, large Muslim population, but and there is mature fintech ecosystem. But at the same time, for example, if you look at the European Union, and I mentioned that European Union has quite good framework for crowdfunding. And there are more than 200 platforms already with the license, which allows to do crowdfunding activities in the European Union. There are no platforms which focus specifically on Islamic finance or ethical investments or Sharia-compliant investment opportunities. So I think there is a big potential to have a platform like this, and maybe this is something to think about. Another opportunity would be cross-border investment. Of course, it's not easy to establish until there are regulations or laws which allow actual cross-border investment and cross-border participation from, for example, GCC in European Union or UK or US. But the potential is huge. And again, this is something to keep in mind thinking about the market development. Tokenization and mostly tokenization actually could accelerate even cross-border investments, because there is a way to bridge this gap with technology and build transparency as well. But it also requires lawmakers to allow this type of transactions and this type of adoption first. Otherwise, in some countries it is possible to do, in some countries it's forbidden. So unless there is a certain framework or certain laws which allow to do it globally, it won't happen easily. And if you look at ethical investing, then it's not just Islamic finance, it's a broader kind of notion, and this trend also could be attractive to if you look for niche or business model which would have potential in certain regions. Okay, so that was pretty much it. Let's summarize. As we see, fintech and Islamic fintech is growing steadily. Fintech started as sort of competition to mainstream financial system, but now it's an essential part of it. And eventually, even larger financial institutions become fintechs in certain sense. If you build something which is supposed to scale, and scale usually is part of business model, it's kind of most of fintech business models, they require scale to be profitable and successful. Then you also need to think about digital infrastructure, how you build it, how you build your software, how you build your infrastructure, I mean server infrastructure, whether it's something which just allows you to launch fast, or is it something that also allows you to scale further and handle a lot of users and so forth. And yeah, as I just mentioned, I think there is a unique window to build something in Europe or maybe US as well, which focus on Sharia compliant digital investments. So feel free to use the idea and explore it further if it makes sense. And yeah, for future success, there should be less fragmented regulation, because right now, as I said, it's very, very different, very fragmented. It is rarely possible to do things cross-border. And if that barrier is lifted a little bit and there is a cooperation between governments, well, not governments, but regulators and technology is basically there. It's more on the law level and rules level. Then there is a future for the industry to grow much, much faster and to much bigger volumes. Okay, that was pretty much it. If you want to connect with me, use this QR code. You will get a link to my LinkedIn profile, or feel free to reach out in other ways.